Portfolio Builder members, this is your Thursday after the close update. The big news is that the U.S. is blaming Iran for an oil tanker attack as Gulf tensions climb. Now, what's interesting is Saudi Arabia is a U.S. partner, obviously, so it's easy for the U.S. to cut off oil to China through Saudi Arabia. But Iraq, Iran, and Venezuela are some of the countries that America has been messing with. And if we go back to the Huawei CFO getting in trouble for making a wire to Iran, that's what started all this mess. So I do think this is all connected and part of a strategic play to start to cut off China's access to oil as the trade war is about to escalate. So there's a clip of Mike Pompeo on TV just about an hour ago saying that Iran has announced its plans to do this back in April and has been up to all sorts of mischievousness. So I'm not trying to make a comment onto the truth of this statement, but this is all definitely interrelated. Twitter is now banning accounts that potentially originated in Iran to block any voice from their country. And so any hopes that a trade treaty will be at least put back on the table at the G20 meeting coming up becoming less and less likely. And so now all the market has to hope for is that they will meet behind the table for a minute. So again, there are no signs of trade tensions easing at all. Meanwhile, the efforts in Hong Kong to block China from a new law that allow them to extradite anyone they want right out of the country, pull them into China. This is causing a huge stir. 1 million people on the streets protesting. Government shut down. Complete mayhem. Kyle Bass, of course, is one of the more prolific anti-China folks. Beijing is behind massive attacks on Telegram app in effort to run down organizers of the Hong Kong protests. U.S. should grant immediate asylum to Hong Kong protesters to save them from live organ harvesting by the CCP or worse. So we now have Kyle Bass and Steve Bannon both going out and aggressively trying to get Wall Street to cut off China from all the money. Here's a little clip. Josh Rogan is amazing in his prescient piece today. He explains how China has duped U.S. retirees into investing into Chinese companies that aren't audited, that don't adhere to U.S. listing requirements, and worse, U.S. needs to reverse the MSCI decision. Related news, Tesla slides after USTR rejects China tariff relief request. And we can see China's imports from the United States have declined much more rapidly than imports from elsewhere during the trade war. This is escalating, folks. It is not simmering down. Quick little clip about the odds on the different Democrats running for office next year. And we're seeing Biden starting to lose popularity as Warren has nearly doubled her odds. If we take a look at the commodities market, everything's up. Gold is getting ready to break into new highs if we really get all the central banks lowering rates and buying their own bonds to fund their government deficits. Look out for gold to rocket, and that's what I would suspect if the trade war escalates. Now, on the off chance that the trade war doesn't escalate, look out below on gold. We got rising rates and most likely a sharp pullback in gold. So that's what we're looking out for in that. Oil's up thanks to all the sudden shocks in supply, thanks to these tanked oil tankers. Here's a chart of crude over the last month. Here's a look at gold right at that top that's been difficult for it to break through for such a long time. We're now tracking the Hong Kong dollar and the Chinese yuan, and that's because Kyle Bass has a nice piece out about how Hong Kong should probably crack in terms of their currency devaluing well before China's. And so this has been pegged and not done that in decade. So it'll be very interesting to look at and watch. Here's the Chinese currency against the dollar. And a lot of people are predicting it will break over 7 to avoid the tariff impact, which will likely cause a lot of rich Chinese to dump their local currency, buy gold and Bitcoin. Here's the 10-year yield. Having trouble getting much lower than this, but just wait till there's a final push into safe havens when Trump raises the tariffs. 30-year, not quite as bottomed out as the 10-year. Here's a look at Bitcoin. Again, we're still long Bitcoin. This part of our portfolio represents 5% of our total assets when we put the trade on. It's now up to about 7.5% or more because it's up 75%. We'll be looking to take profits and get out of the way based upon when we think the trade war will end. Now, the good news for those of you holding Bitcoin, if I had to bet, I would bet trade war escalates. And if that's the case, Bitcoin has a lot of room to run. So we're still long Bitcoin, but it will be time to take some profits off the table. This is a tiny market cap. $146 billion. It's nothing. Could be wiped out very easily in just a short-term scare, which I believe will happen for Bitcoin the second the U.S.-China trade war simply slows down. Doesn't even have to really come to an agreement to cause a sell-off there. SPY today, down a little bit. We're set up to do great if it goes up, great to do if it goes flat, and if it crashes, we can make a little extra. There's a tiny, tiny vulnerable area below where we wrote the covered call and before our put option gets put into play. But we have a very defensive setup, so there's no real risk right now of losing very much money in our basic program because of this very defensive play. Different views of the SPY ETF, 1 year, 5 year, 10 year. TLT, we'll see. Can it push up to 143 or even higher? If this goes to 0% interest rates like the rest of the world, TLT could probably go up closer to $200. So that seems highly unlikely, but potentially one last hurrah. When Trump raises the tariffs and we get another pullback in stocks, I could see that. So I definitely see this potentially going up to those 2016 levels, maybe a little higher, and something we're carefully watching. Emerging markets, this is what we look at for a leading indicator on the U.S. markets. Flat. Beyond Meat slowed down today. Some of the other IPOs had a good day, so this is another way to kind of try to get a feel for what's going to happen to the overall market before it happens. So we look at these new IPOs. That's a good gauge of the current risk appetite of the big money. So they're still buying that the trade war can be delayed or solved right now. This is our Diamond Club portfolio. We're all in on Apple. We have the same setup. We have a covered call that's deep in the money, and half of the profit, if we go higher, is in a put option. So this one's got its maximum profit if we go up, and it's still got its put option. It's sitting pretty. Nothing to worry about. That's our Diamond level membership. Trades on Tuesdays. Trade war stocks. Mostly the semiconductors are in this group, or people related to 5G, internet, networks, things of that nature. So no big moves in it today. Again, this is another way to have a heads up for our SPY. The whale program is long Amazon and Google. Same setup, very safe, going for 0.5% a return profit per week, which adds up to 28% a year. Tons of downside protection. We make money in 3 directions, up, flat, or down. There's a small band where we're weak, right around where the in the money covered call is written, and before we get below our put option we bought. But in general, we just can't lose very much with this play. We're taking advantage of the option market that's very lucrative for Amazon and Google right now because they recently had sharp sell-offs. Here's Amazon. You can see all that volatility. All that gyration in price makes the option premium very lucrative on Amazon right now. Same thing for Google. They also have these antitrust probes going on. We got Trump bashing these Google, Amazons publicly on TV. That's creating more angst. And that's all great for us because we're just trying to pull a consistent profit with a very safe, high probability trade. Here's a look at Google on the 5-year. And so that's a wrap for today's update. Here's our basic portfolio sitting at the 8.5% profit. Of course, we still have an open covered call, so that will adjust after we cover that and write a new one, which is tomorrow. That's the next trade alert for basic members. Our Diamond program trades on Tuesdays. It has a very healthy profit so far. It goes for a bigger return and it takes on extra risk. So it makes more, but it has the potential to lose more. Its next trade alert's Tuesday. Currently, it's only trading Apple with that nice setup where we sell an in-the-money covered call, take half of the profit that we have baked into the cake with that setup, and invest it in a longer duration put option. So now you can win in a lot of different outcomes. Whale Club trades on Thursday. This one's going for usually a smaller return. It's more patient and it does require more capital. To follow this program, you will have to have 100 shares of either Amazon or Google, and ideally both. So that puts your buy-in at around 300K. But you're going to have a great setup and trade some securities that most people just don't have enough capital to trade even if they wanted to. So that's a wrap for today's update. If you would like to save on a membership or if you're on the expired list, you get these great updates, but you don't get the trade alerts live. When you do upgrade from a expired free trial, or if you're just on a free trial, you have a few immediate benefits. Number one, you're going to get our customer-only webinar instead of the freebie webinar. That's Wednesdays at 1 with only our paid members, while Thursdays are for our free group. 2, you're going to get a 30-day free trial into the Diamond Club and the Whale Club. That's where we're trading Apple, Amazon, and Google. Now, our basic program does the SPY ETF Monday, Wednesday, Friday, but you'll at least get to see how our trades perform on the more advanced and more expensive programs on Tuesday and Thursday, free for 30 days. So call Dean, 505-322-7515. Upgrade your membership. We are raising the price to the basic program to $2,000 a year. So this is the last chance you can have to call in and save $1,100 a year right now. So thanks again. Look for a new trade alert tomorrow morning.